it going, YouTube? I'm Ari and welcome to Blue Line Finance, a channel for the value investor out there. Now, if you are brand new to the channel, just stumbling across it for your very first time, Blue Line Finance came about not too long ago in 2019, literally to show you all through the power of dividend and value investing. I set a goal of hitting $100,000 within my Vanguard brokerage account. We're now $600 away from doing so at $99,407.83. That's neither here nor there in today's video because I want to get busy with talking about the top dividend stocks that are right now trading at or below fair value. From high inflation, the Fed's unable to control it, the war between Russia and Ukraine, and now financial education and everything money going head to head, the market sentiment is really anything but positive. So given it's July, the 7th month of the year, I want to get to talking about 7 high quality dividend stocks here. And just before we get going, make sure you tap on that thumbs up button and help me grow this channel. Of course, if you haven't already subscribed, go ahead, make your way over to doing so. I'd love for each and every one of you to be on this journey with me. Now, YouTube, let's go ahead and dive right in. I'm excited to get started today, so let's get right to it and talking about our very first stock that's been developing and delivering through on new technologies, software, and engineering services since 1890. This is to say it has one heck of a track record prevailing through really whatever market conditions are thrown its way. The company is Emerson Electric, ticker symbol EMR. Now, over the years, they've become very focused on what they share are really 2 core business platforms: automated solutions for businesses like data management systems, and on the other hand, commercial and residential solutions comprising of mainly control systems like the air conditioning controls and thermostats in your house. Now, that all may sound a bit boring, which at least to me it does, but they've been extremely profitable in what they do, which is what matters most. They've been able to amass a market capitalization currently amounting to $48.04 billion. And even though Emerson Electric has faced some challenges throughout the last couple of years with disrupted supply chains, they have continued to see incredibly strong order activity, which built up a backlog worth of orders. Now, as supply chains recorrect, Emerson Electric will be a beneficiary, but until then, their stock remains pretty volatile, and I think it's worth your attention. The stock is down from its 52-week high of $105, now trading for roughly $80 a share. That's a 23% change. Their PE is at 16.92. Now, when looking at analyst projections, they foresee growth ahead, with Emerson coming back up to an average share price of $99.20, a high stock share price of $115 per share. Now, until it reaches their stock share price, we will collect on an ultra safe dividend, which they've been paying out and increasing year over year for the last 65 years. It's currently coming in at a dividend yield of 2.57%. Now, next up, let's dive right into Caterpillar, ticker symbol CAT, the world's leading manufacturer of construction and mining equipment, as well as heavy diesel and gas engines. The company was founded in 1925 and has since only made a mark on the world with iconic yellow construction vehicles, which I'm sure you've seen all over the place. Their market capitalization is at $96.16 billion. In my opinion, there's really no company out there going head to head with Caterpillar within their industry. It's a very safe investment. Now, throughout 2020, 2021, and 2022, Caterpillar saw tremendously strong sales growth coming in across their different segments, from construction to resource and energy, all spiking over 20%. Now, that's largely due to the infrastructure deals, which all required heavy construction equipment. But with a looming recession, sales growth projected to actually slow down. That has caused a lot of Caterpillar shareholders to take their foot off the gas, and we saw their stock share price fall from their 52-week high of $237 per share down to $180 per share. That's a 24% change, but with their PE ratio sitting at 15.12, that long-term investor can get in now on an opportunity, especially as analysts are forecasting an average stock share price of $234.73 per share and a higher target price of $282 per share. Now, with 29 years worth of consecutive dividend growth, Caterpillar is well worth the investment during uncertain times, allowing all of us to collect on a very stable dividend coming in at 2.58%. And while on the topic of all things construction, we might as well drill right into Stanley Black & Decker, ticker symbol SWK, which doesn't necessarily deal with the bigger toys in the construction industry, but certainly is a dominant player in the space for their manufacturing of industrial tools as well as household hardware and security products. And a matter of fact, they're the world's largest maker of tools, the second largest commercial electronic security company, and just a massive provider of engineered fastening systems on a global scale, all of which has allowed Stanley Black & Decker to amass a market capitalization of $16.89 billion since their founding in 1843. And talk about reliability when it comes to an investment. With brand names from DeWalt to Craftsman and Paladin, they have just become a very reliable investment. However, as for the near term, the company is experiencing a decrease in sales with the engineered fastening business due to weak infrastructure end markets. On top of that, a downside in new residential construction as well as repair and remodeling construction, all causing the stock share price to spiral from a 52-week high of around $210 down to around $111. That's creating a whopping 47% change. Now their PE ratio is at 13.4. The bigger question here is, where are they going to be trading post-market mayhem? Analysts foresee that stock share price soaring to an average share price of $148.82 a share, and an even higher target share price of $200 per share. So just a ton of upside potential. Now until then, we get to collect on their dividend. They've been shelling out for 54 consecutive years. It's coming in at a dividend yield of 2.85%. As for our fourth honorable mention of a dividend investment you can make today, we have Archer Daniel Midland. Its ticker symbol ADM, which I'd actually like to bet the vast majority of you haven't even heard of until now. And if that's the case, go ahead, tap on that thumbs up button. Great, now that you did that, we can dive right in. Archer Daniels Midland is an American multinational food processing company, aka they are just creating and combining ingredients and flavors for food and beverage, so they're really like food scientists. Now, since their founding in 1902, Archer Daniels has been able to turn itself into a global leader on a nutritional front and amassed a market capitalization of $41.87 billion. Very recently, Archer Daniels fell victim to rising prices thanks to inflation, but also thanks to inflation because this value play has now come down in regards to its stock share price, falling from a 52-week high of $99 per share down to around $73 per share, creating a 26% change. Their current PE ratio is at 13.7. Now this company has been experiencing a lot of growth and will likely continue to do so with their focus as they respond to the growing trends for all things sustainable. Now analysts are forecasting an average stock share price at $97.88 a share, a high stock share price at $111 per share. But like the other dividend investments on the list today, Archer Daniels is no exception. A 2.13% dividend yield, increasing that dividend year over year for 49 consecutive years. As for our fifth dividend stock on the list today, we have the 8th largest big box department store chain within the United States. That is Target, ticker symbol TGT. I don't think a whole lot needs to be said about Target, but it's worth noting that since its founding in 1902, it has truly come a long way, growing a market capitalization that now sits at $69.54 billion. However, amidst all of the market conditions, an investment into Target hasn't exactly been a fan favorite, if you will, with recessionary fears looming. Consumer wallets tend to keep to their pockets, resulting in less revenue, of course, at the end of the day for bigger retailers like Target, resulting in their stock share price actually sliding from their high of $268 per share down to around $150 per share, a 44% change. Target's PE ratio sitting at 12.4, so quite on target, if you will, for a solid opportunity. Personally, I don't own Target, but out of all of the big box department stores, if I had to pick just one, it would be Target, simply for the partnerships they've managed to actually build, from Starbucks over Walmart's, McDonald's to Apple. It paints Target out to be more of a quality department store, if you will, which attracts, of course, a different type of consumer day in and day out. But that's not to say I don't enjoy those Walmart prices. Now, looking ahead, analysts are forecasting an average stock share price of $181.92 per share, a high stock share price at $231 per share, and of course, we can collect on Target's dividend with 50 years worth of consecutive increases, sitting at 2.49%. And next up, Aflac. We have Aflac, ticker symbol AFL, which is one of America's leading insurance companies. Well, actually, it's the largest provider of supplemental insurance in the United States, founded back in 1955, and based on the fact that everybody needs insurance, the insurance industry itself, with the business models of generating revenue before accidents even happen, make for a very safe play all around. Now, the proof of its safety is in the pudding. For example, while the S&P 500 index fell by roughly 9% year to date on the news of increasing inflation and economic turmoil, Aflac stock actually jumped by 5% thus far in 2022. Now, in terms of Aflac's market capitalization, it's at $36.3 billion, and even though it's been performing well, just like all stocks across the board, it's seen some volatility, falling from a 52-week high of $67 per share down to $56 per share. That's a 16% change. Their PE ratio at 9.2. It's another one for your watch list, especially as interest rates rise. Why? Well, $143 billion worth of their investment portfolio is in US bonds, so the Fed raising rates will inevitably allow Aflac to actually benefit. Now, as far as analysts' expectations, Aflac has an average stock share price coming in at $62 per share and a high stock share price at $66 per share. And let's talk about that dividend of theirs coming in at a dividend yield of 2.61% that they've been shelling out for the last 39 consecutive years. Now, last but certainly not least, a home run of a stock pick for the long-term investor that I've been talking about now for quite some time, perhaps too long. We have Rowe Price, ticker symbol TROW. It's a global investment management firm offering funds, advisory services, account management, and retirement planning for individuals, institutions, and financial intermediaries. Now, the firm was founded back in 1937 and has become one of the most respected, reputable names within the industry. Current market capitalization sitting at $27.03 billion. I'm going to keep this short, sweet, and to the point because I've spoken about Rowe Price so much. The vast majority of their assets are tied to the NASDAQ, so with the entire market being down and the NASDAQ having taken one of the biggest hits, of course shareholders are going to be running for the hills when it comes to such an investment. But Rowe Price is down from their 52-week high here of $224 per share, sitting at $115 per share. That's a whopping 48% worth of a change, and their PE coming in at 9.6. Talk about a discount opportunity for all of us, for those who are able to patiently await an economic recovery. Analysts are right there with us, forecasting a rebound to $124.45 and a high stock share price at $156 per share, which ultimately, even longer term, I believe will only continue to rise. However, shareholders are going to be able to collect on Rowe Price's dividend in the meantime, with their current dividend yield coming in at 3.9%. Now, YouTube, that is it for the 7 dividend investments for the 7th month of the year, from Emerson Electric to Caterpillar, Stanley Black & Decker, Target, Archer Daniels, Aflac, and Rowe Price. Let me know your thoughts on these investments, if they're in your portfolio or on your watch list, or even the stocks that you've been currently interested in maybe buying more recently. Drop all those comments below. Now, keep in mind, I am not a financial advisor, so just be sure to do your due diligence following my videos and before making any final investment decisions. And of course, before we get going, make sure you tap on that thumbs up button and help me grow this channel. If you haven't already subscribed, there's still time to go ahead and do so now. Now, until the next video, YouTube, I will see you all there.